So you're an investor from a treaty country and you've just secured your E-2 visa by investing a significant amount of capital into a promising U.S. business. Congratulations, you've made it this far. Now, although this visa allows you to live and work in the U.S., it also brings certain responsibilities. One of the most frequently asked questions by you guys is about tax obligations. How much are you gonna pay now that you have this visa? So today I'm gonna dive into this topic and clear up some of the confusions that you might have, but this isn't tax advice and you definitely want to talk to a licensed accountant. So for E-2 visa holders in the US, the tax obligations are mostly going to be federal, state, and local taxes. You're typically subject to taxation on income earned within the United States, whether it's from business ventures, employment, or investments conducted on US soil. However, two key considerations significantly affecting your tax liabilities is the substantial presence requirement and worldwide income. The IRS decides the tax status of E-2 visa holders using a test called the substantial presence test. This test checks how many days you have been in the US over the current year and the last 2 years combined. If you meet the substantial presence test, you are considered a resident alien. This means you are treated as a U.S. resident for tax purposes and must pay taxes on all your income, no matter where it's earned, both U.S. and international income. So you have a business in Mexico and Canada making a ton in dividends, you gotta pay an income tax in the US as well on that. So keep in mind that as a resident alien, you'll be subject to federal tax rates that range from 10% to 37%, and it's gonna really depend on your income bracket. On the contrary, if you don't meet the substantial presence test and you haven't yet received your green card, and if you're looking to get a green card, you are considered a non-resident alien. In this case, you are typically taxed at a flat rate of 30% on certain types of income, unless a tax treaty between the US and your home country specifies a lower rate or there's a change of tax credits. And a big plus is that there's no taxes due to the US on your income outside the US. Let's look at a couple of examples here. Under the U.S.-U.K. tax treaty, certain types of income like pensions or retirement account distributions might be taxed at a lower rate or even be exempt from US tax. So you have a lot of people from the UK benefiting from that tax treaty, similar to Germans coming here benefiting from the U.S.-German tax treaty in terms of income such as dividends, interest, and royalties. All right, now let's talk about something that can really impact your finances, and that's gonna be estate taxes. So depending where you're gonna live, between California, Florida, it's gonna be a huge difference in taxes that you might pay. So every state has different tax policies, and even some cities like New York City or Santa Monica charge their own income taxes. So Texas, Florida, and there's a few other states, no state income tax, so you can save a lot of money on your taxes moving to a state like that. On the flip side, if you're thinking about states like New Jersey, where the state income taxes can range anywhere from 1.4% to 10.75%, California up 13-14%. So when you're deciding where to live, this is definitely something to keep in mind, as you might have to spend a lot of money on taxes. So there you have it. I hope this quick overview of tax obligations for E-2 visa holders was helpful. I'd love to hear from what you think. So drop your comments and any questions below. And if you're thinking about moving to the US through the E-2 visa, feel free to get in touch. We offer free 30-minute calls to chat about your situation and find the best way to start your new life in the US, whether that's buying a business, buying a franchise, starting your own business. If you do become a client of Visa Franchise, we will set up free calls with CPAs that can advise you on the best entity structure, pre-immigration tax planning, as well as ongoing tax compliance. An important thing, it's not all doom and gloom in certain states like New Jersey, New York, California, as you're paying taxes and you're getting back something in return with oftentimes great public schools. I hope to see you on the next video. Appreciate it.